that in the last 6 or 8 weeks, there have been 3 banks that have been put in focus by my best source in European banking. And he's got his fingers in a number of different areas. He's got some contacts in Germany and others in London. But the real big focus that he has been giving me, and this is since June, since late May, he says, Jim, 3 banks are in danger of being overturned. 3 banks are in trouble. And the 3 banks are fighting every single night to fight off insolvency and bank failure. Failure comes from insolvency combining with the threat immediately of illiquidity. Not enough money to deal with it, not enough capital to handle credit issues and all this stuff, credit requirements, ratios and all that. But he says Citigroup in New York, Barclays in London, and Deutsche Bank in Germany, every single night are in trouble. And then you had Max Kaiser a couple of days ago reinforcing he has a Swiss hedge fund manager who says that Deutsche Bank is on suicide watch. And I think you put a note immediately out on that saying, yeah, this confirms something that Jim Willie has been talking about. Yeah, I've been mentioning Deutsche Bank as a potential trigger for the last month or so. In fact, I had an entire chapter with 4 or 5, 6 pages in my Money War report for July. It was just for the potential trigger event that Deutsche Bank would provide. The important thing to keep in mind about Deutsche Bank is that it won't go down alone if it goes down at all. If it fails, it'll take down 3 or 4, 5 or 6 or 10 or 15 other banks. And it won't be right away. It'll be 1 or 2 quickly, and then it'll be a 3rd and a 4th, and then a couple of weeks later another one. And before you know it, all of Italy and their major banks are kaput. I mentioned kaput because that's a German word. A year ago we were talking about LIBOR. And some people thought, well, the big banks are going to have some really big lawsuits here, and some of them are going to fail. Well, the lawsuits are being contained. The court system is very much a friend of the banks. LIBOR really didn't result in much, but my belief is that Deutsche Bank and its potential failure and its constant overnight risk of failure is indeed somewhat a LIBOR risk, but a little bit more a risk having to do with their Forex derivatives. In other words, derivatives that the banks use to balance off the currencies, the Forex. And believe it or not, in the derivatives world, gold is treated like a currency. Isn't that ironic? Yeah. So the Forex derivatives that the banks are deeply involved in are very much tied to gold. The big immediate threat for Deutsche Bank, though, has to do with their problems in hiding a lot of different debt for the sovereign nation, sovereign applications for the European Monetary Union. I'm sorry, the EMU. The euro, the common euro zone. For instance, Greece and Italy had to make their application and satisfy certain debt requirements. They couldn't be over a certain level in total debt. They couldn't be over a certain level for their annual accumulation toward more debt. So what Deutsche Bank did was they falsified some nice big chunks of debt and put it in the form of a currency swap. Let me give a quick example of how devious that is. Suppose you're sitting in your own little world and you've got your credit statement and it shows a $250,000 bad business loan that's really stinking up your credit report. So you call up your favorite Deutsche Bank broker, Goldman Sachs or JP Morgan, pick your criminal enterprise that's your favorite, and you call up and you say, look, I've got a $250,000 debt here. I want to go away. And they say, okay, we can do something clever here. We can pay off your debt so your credit report looks good. And we can establish this $250,000, let's convert it into euros so it'll be $190 million. I'm sorry, $190,000. And we'll convert that into a euro swap. And we'll keep it off the books. So you got this $250,000 debt stinking up your credit report. It goes away and is replaced by something hidden in the euro currency swap. Well, that's precisely what was done on a larger macro scale with Greece and Italy, and Deutsche Bank is involved in several of these. And the total that's now becoming disclosed on their corrupt balance sheet is $400 billion. So apply your typical ratios and you conclude that they're, who knows, 10, 12, 15, $20 billion short for capital requirements. Not only that, but it's fraud. I mean, when was the last time we're seeing any of these banks charged with fraud? They're stealing trillions, they're defrauding billions, hundreds of billions, and just running around like this is business as usual. I maintain, John, a very simple point, and I mean this sincerely. The big banks are so criminal that they've converted fraud and criminal activity into a small cost of doing business.
I want to get back to a point you touched on here that unlike Lehman Brothers, Deutsche Bank would take down 5, 6 or more banks. If you could clarify that for listeners, how is Deutsche Bank different than Lehman Brothers in the event of what it could trigger, and also what could lead to its failure first?
Well, let me start with, as preface, why it's at risk immediately, say more than Barclays. And by the way, Barclays came out with news today. Well, their today is our overnight, but as we wake up in the morning, we realize that during London's daytime, Barclays announced a capital shortage of $12.8 billion. They're insolvent. And they announced a nearly $9 billion stock issuance to address it. It's done in the form of a rights issue, which means existing shareholders can get a discount. I think it's something like a 30% discount on additional shares. And a lot of institutions are bound to keep their investment ratios intact. So some of them will actually be compelled to buy some, even though they might consider it good money after bad. All right, so you've got Deutsche Bank in a different situation. Barclays, all right, they just come out and say we need to raise some capital. They're not under any great financial fraud investigations like Deutsche Bank. Barclays, very much like Deutsche Bank, lost their CEO last year. Ackerman, Joseph Ackerman, last year was forced out. And some of the stories behind forcing out the Deutsche Bank CEO Ackerman are worthy of description before I get to the contagion point. I heard this a year ago, and it came from a contact who had German associates who, through the grapevine, heard the actual story. A bunch of Interpol agents came in unannounced to Ackerman's office. The marbled office of the CEO of Deutsche Bank. And they said, we're going to need to go through your files and recover some documents and emails and various other things regarding contracts and swaps. And so Ackerman said, well, wait, who the hell are you? And they said, well, we're with Interpol. Sit down over here. So Ackerman busily called up a judge, a high-level judge, I don't think it was the Supreme Court, but a high-level judge, who told Ackerman, to his surprise and dismay, this is over my head. Wow. What could be over the head of the CEO of a bank and a judge? something pretty high level. Then he made another phone call to a politician who told him the same thing. This is over my head. And that's why I used the phrase last year that there's a new sheriff in town. And what I'm hearing is big, powerful Eastern entities have hired the Interpol to clean things up. And it had to do a lot with, we saw events in London last March, April, May, and June. A little bit after that, 5,000 metric tons of gold were lifted out of London as settlement for complaints. And I believe, and the indication I got was that the Eastern entities, very wealthy old groups, were angry as hell that their gold had been used improperly. Just think allocated gold, hypothecated and leased, whatever. The London banks used their Easterners' gold as equity for futures contracts that went bad, like in Spanish or Greek Italian debt, for instance. That's what I was hearing the examples were. All right, so there's a new sheriff in town. Deutsche Bank CEO could not withstand an assault on their office to retrieve data. All right, this is new. This is different. Now what we're seeing is several vice presidents at Deutsche Bank are being indicted or under serious fraud charges, and they are almost all cooperating with Interpol, and we call that flipping. So they've flipped to cooperate with the Serious Fraud Division of Interpol. It's interesting to me that London and New York are fortresses, but Frankfurt and Germany might be in the process of being penetrated. It's all right, so they don't have as many people at the staff manning the desk. It's a sexist term. They don't have enough staff at the proper desk to keep things going. Well, why is Deutsche Bank a whole lot different? It's because, different from Lehman, it's because they're involved with all of the different sovereign bonds. Spain, France, Italy, Greece. They're involved in all of them. Of course, they're involved in falsifying their original debt credit reports, if you will. They're the balance sheet analysis qualification for the European Monetary Union. Okay, very interesting distinction there. So you could say that Deutsche Bank is involved very closely with all the major currencies and all the major European sovereign bonds. And they've got a lot of different swaps with different banks across the world, primarily London, New York, and France. So they've got these different lacing. It's interwoven fabric between Deutsche Bank and all the other ones in the West. It gets so bad and deep that I have a client who's telling me that Deutsche Bank has got a bunch of swaps that they wrote against Detroit municipal bonds. Deutsche Bank got their finger in a lot of different pies. Lehman Brothers was involved in lots of different mortgage instruments having to do with the Western banking system. So my friend Rob Kirby makes a point. He's very plain. He says, look, don't bet your money that that Deutsche Bank's going to go down. If it does, Citi and Barclays are probably going down with them, but the next day it's going to be HSBC, Morgan Stanley, Societe Generale of France, and big threats to JP Morgan and Goldman Sachs. Deutsche Bank, in conclusion here, John, it owns $25 trillion in OTC swaps with the central banks and other major banks. So expect a daisy chain of derivative failures for the, what is it, 1.6 quadrillion derivative market? Or is it only 800 billion? I don't know, there are various reports on that. Deutsche Bank cannot fail by itself. It would result, I think, in the breakdown of the European Monetary Union, euro currency. And if it breaks down, just look for a sequence of events that will make it very apparent that there's no place to hide. and Deutsche Bank failing, or going through a massive restructure where, say, it's merged with Barclays. I don't know. But when a big bank dies in today's world and they're too big, they don't want the consequences, they merge them with something big. I don't think JP Morgan's going to merge with them, but maybe Barclays would. Something in Europe, maybe they'll announce a merger with two other banks, like the biggest French bank and some London bank. I don't really know, but they won't let them go down easily. With this grand impression that there's no place to hide, I think we're going to start seeing a lot of money flying into gold, especially when they learn that the Deutsche Bank failure involves a bunch of swap forex market that treats gold like a currency. So look for I think we're going to the whole Deutsche Bank failure with other big banks. I think that's what pushes gold way over $2,000 again. What's going on right now, the gold price, and I got to admit, in my article recently, this week, I had it backwards. The gold price is what the bankers redeem, and the price of gold is what its real value is. So the joke is that people confuse the gold price with the price of gold. It's kind of a funny statement, but silver's going to be moving over 100, and gold's going to be over 5,000. I'm certain of that, as I am that next January there'll be a sunrise every single day. So that's how certain I am of it. Deutsche Bank could be a major trigger, and the fact that it's under such scrutiny for accounting fraud right now and financial prosecution by Interpol means that their arms are tied. They're not able to keep things going, and it's like, okay, I need to put my 10 fingers in the 10 holes of the dike because it's breaking, but damn, I got 6 fingers that I need to put over here to deal with Interpol and all the cooperation. It's a very unstable situation, and I think it's going to reflect on gold for a number of reasons. Where is safe haven? After Lehman fell, they played a lot of games, but after the next big bank fails in the West, they're not going to be able to play the kind of games that they have in the past. It's going to be a lot more evident, oh my gosh, there's no safe haven. And look, tomorrow there could be bail-ins with account confiscations. And after Lehman, we also had MF Global, which made it very clear that your private brokerage accounts in futures contract, they're not safe either. So where's the safe haven? And everything points to gold. I think the bail-in could be really what could move a single bank failure to contagion. With the Lehman crisis, we had the bailout model, but what we've already seen with Cyprus, and if we see a bail-in of a big Western bank, the other banks that are on the precipice, you'd have to believe a good amount of depositors are going to pull their funds to get them under the max threshold as soon as possible, as they really can see the writing on the wall with the bail-in of a Western bank. So that's what, in my eyes, that's what I think could really provoke a contagion type domino trigger if a big Western bank does go under. Well, let me add to that. The allocated gold account scandal it's really brewing right now. I mean, you got Egon von Greyerz talking frequently about how the different Swiss or Central European bullion banks are denying their account holders even a look at their gold, let alone a redemption of their gold. I'd like to take out my $12 million worth of gold, thank you. Well, I'm sorry, we won't even let you look at it. You can't take it, but we won't even let you look at it. These bullion banks are going to be buyers. They have been buyers. And the fact that you've got these long delays, like at Morgan Stanley, for instance, you got these long delays on transfers. It's because they don't make the transfers because they don't have it. They have to go out and find it. When they go out and find it, they push up the price with some more demand. The bullion banks that have improperly taken and used and leased and hypothecated allocated gold accounts, they're replacing their ill-gotten sold bars. They're replacing them so that the account holders don't file lawsuits and criminal prosecution charges. So there's a lot of demand that's behind the scenes, and it's really quite interesting. This is like a crime scene, and the governments are doing their best to cover everything up. The governments are not enforcing law, and this has been probably the biggest casualty besides personal freedoms and illegal searches and molestations in airports, things like that. But there's no rule of law in the West anymore. It's being covered up. You get big events, and before you know it, the FBI is on the scene trying to protect Goldman Sachs from their, oh gosh, remember 2009, they had their little Unix box to take a peek on their flash trading desk, take a peek on all the orders at the New York Stock Exchange. Well, what happens with all that? FBI steps in and they rush in to arrest a Russian fellow, and they make him look like the rogue. Oh, he stole software. No, he was trying to expose Goldman Sachs for its criminal activity in order flow. Oh, it's really sad what's happening, and I like to point out, and very few other authors seem to latch onto this, but this is called the fascist business model. A merger of state with big corporations and complete license for fraud, for criminality by the banks, by defense contractors. And when was the last time we had some real prosecution for skimming $1 billion here or $1 billion there from the Iraq War? No, it is all normal business matters. All right, enough of all that. We got some pretty wild things going on with the gold market, John. So yeah, where would you like to kick that off?
I'd wanted to get back to gold. Really what's been happening in gold is we've had quite a few unprecedented events over the last 2 to 3 months, but really over the last month especially. Look what's happening at the COMEX vaults with the massive inventory drawdowns. JP Morgan's vault hitting all-time lows. The entire registered COMEX inventory is just plummeting, and this is really in the face of a negative GOFO rate at the LBMA for the 3 months that has been negative now for, 16 days, which is absolutely unprecedented as far as the duration of the length it's been negative. So what's going on with gold, Jim?
What's going on with gold? Oh boy, what a huge question. Well, you touched on a lot of major points, and I just wrote a public article about the extreme gold market with supply versus demand. We're not seeing the price of gold, the true price of gold, being properly reflected. There's no equilibrium. The most important point to start with regarding the gold market is that there's no equilibrium. If you look at basic microeconomics textbooks, and this is where the PhDs in economics fall on their faces. They don't notice, they don't talk about how in a market that an equilibrium should be reached. What you should see is that demand clears the supply, and the supply satisfies the demand. We're not seeing either. We're seeing shortage and huge demand. Shortage in supply and unspeakable demand across the whole world. We're seeing pockets of shortages, pockets of different availability, different prices here and there, different premiums here and there. The whole market is disrupted. So we don't have the true price of gold being reflected by the official COMEX gold price. The COMEX gold price is a farce. The LBMA tag team, I call it, COMEX LBMA tag team, they're a joke. They're a criminal enterprise. Okay, you mentioned the drawdown in the COMEX gold inventories, and the dominant player in that is JP Morgan. And they're seeing a huge drawdown in their inventories. But what's, I think, even more telling about the criminality, besides the empty vaults, is the ravaging and the pillaging of the GLD exchange-traded fund holdings. They're going down massively with the COMEX gold inventories. They're going down massively with the JP Morgan plummeting inventories. And it's really two things. There's some arbitrage going on, and there's satisfaction of deliveries. The Shanghai Gold Exchange, I'm just going to throw some numbers out for argument. They're probably going to be off a bit, but they're going to be close. There's a premium for the Shanghai gold price. It's anywhere from $20 to $40 higher. There's a lot of rumors that Wall Street banks are taking GLD inventory and selling it in China and capturing the arbitrage profit. There's other evidence, these are not rumors, but evidence that the volume for gold deliveries at the COMEX are almost identical with the drawdown of the GLD inventories for the supposed shareholders. I regard the shareholders for GLD as some of the stupidest human beings ever to set foot in the gold community. They don't read the prospectus, they don't understand much of anything, they're lazy and they're stupid. And what they're realizing slowly, because they're so stupid they don't even awaken quickly. The GLD shareholders are so stupid they don't realize that the big banks are shorting their shares legally as prescribed in the prospectus and helping themselves to the inventory of gold bars in GLD on a nightly basis, and now they're using it probably, I'd say 90% certainty, they're using GLD inventory to satisfy COMEX deliveries. It's so ugly that in the silver market, JP Morgan has not yet satisfied and delivered on the June silver futures contracts. It's so ugly that using hidden entities that Andrew Maguire has detected in London, JP Morgan is using hidden entities to hog 90% of the July silver deliveries. So it's pretty clear that JP Morgan doesn't have the silver to meet the deliveries for June and is trying to replenish their own vaults by taking delivery in London secretly to replenish their inventory. And where are they getting it from? Oh, I don't know, maybe the SLV, that other exchange-traded fund where the investors are equally the stupidest people ever to set foot in the precious metals community. This is just staggering. The JP Morgan clients have removed, this is between December and June, the JP Morgan clients have removed close to 40,000 kilograms of gold. That's 40 metric tons. While JP Morgan's house account has removed over 40 metric tons in the same 7-month period. What's the lesson, the conclusion there? It could be that JP Morgan's best friends and clients don't trust them anymore. No, JP Morgan's being isolated. It's so weird and ugly that Henry Bath delisted 21 different metal exchange storage units worldwide. And that's the warehouse manager for JP Morgan, which I like to spell M-O-R-G-U-E-N, because they're a morgue. They're just a morgue. You got 100-day delivery delays in London for gold and silver orders. Why is that? Because they don't have any. They have to go out and find it. They have to create new wars to accumulate it. See Mali. I got a funny little story here. It's just a quick aside. It'll only take a couple minutes. But I got a friend in town here in Costa Rica. And he went on something that's called a canopy tour. It's a zip line. It's like a clothesline that's 50 yards or 80 yards or 200 yards long, meters. And it's a zip line that you have a harness and you go on this little pulley thing and you descend maybe meters as you slide 200 meters. It's a gas, it's a thrill. And you're in the forest and you're elevated in platforms. And they were just having lunch afterwards, a group of 15 in this guy's group. And he was talking with this fellow from Germany. He said, "What do you do for work?" And he said, "Oh, I work for a PSYOPs group. I work for Psychological Operations Group." "Oh, what do you work on?" "Oh, we create fantasy stories in Germany about the Mali war and all the Islamic terrorists that do not exist in Mali." He said, "Oh, so you make up false stories and lie about what's going on in Mali and the justification for the war?" "Yes. Isn't it funny? Isn't it funny that so many people believe the stories?" Okay, so that's the justification for the Mali war after Germany demanded repatriation of, I don't even remember, a couple hundred tons of gold that were supposedly kept in Paris and London. So they don't have it, and the lesson is that they go out and get it. Well, they've taken what's in the allocated gold accounts, and I'm hearing from my best source, The Voice. He's a gold trader with years and years of experience, a couple decades, I think. He started in Scotia in Canada. He's telling me that the allocated gold account raids have resulted in it at way over 20,000 tons, probably over 40,000 tons, and could be as much as 60,000 tons. The German problem is just a small piece of this. The ultra wealthy in Switzerland and Germany and Liechtenstein and Sweden, they've got their allocated gold accounts sitting in Swiss banks. They're not allowed to get it out, and they're very angry. So this is a big bulk of what's missing. And Fort Knox is 8,500 tons. The United States doesn't have any gold at all. I got a client named George, not a client, he's a friend, a colleague. He's a friend of a friend, and they're both friends. So I'm a friend with my friend, and he's a good friend of his friend. Anyway, this friend, two links along, he was a logistics manager for the Comex in Chicago. And he's got a very good friend from 15 years who worked with him. And they've all gone their separate ways. And he's doing something else now. And he was a victim in the MF Global. He had his account stolen and raided and not really replaced. Some have, but in part. But he's got this friend who called him up one day and said, "Oh, you're not going to believe this, George. I'm now the manager of security at Fort Knox." And George said, "Oh, gee, what are you guarding?" And he said, "Well, the whole place, the whole facility in Fort Knox in Kentucky is filled with nerve gas." Okay, so they raided the gold, they took it out, they leased it improperly, they sold it in the market, they had all their different futures leverage contracts in there to make, I'm thinking, $2 to $3 trillion. This is the Clinton and Rubin gang. So now it's missing. Someday the United States might have to replenish its gold. That's going to be when there's a lot of demolition dust on the ground from all the big banks and the financial structures pretty much dead. But in Europe, it's a little different. They're trying to replace the gold that they took from Germany, and they need war in Mali. It's interesting that as soon as they need a war, we've got these stories of Islamic terrorists. Gee, the terrorists live in New York, Langley, and Washington. So there's a lot of stuff going on. Other things like ABN AMRO, they decided back in April they cannot redeem on their account holders' request for redemption of gold. Another small Dutch bank just made the same thing, same statement. They're not going to redeem on gold accounts. Morgan Stanley is stalling on every single metals transfer requests. The reason they stayed are flimsy. When it is transferred, it's inconsistent with the serial numbers and the weights. Clearly, the broker-dealers are going into the market to find the gold, to find supply in order to meet their just daily requirements. The Brinks gold accounts, they're going bare. They're almost down to zero. All these different things are pointing to on the supply side. We'll get to demand in a minute, but you got problems across the world. You got in Dubai what they call the souks. Those are the markets. The Dubai souks, they've got chronic shortages. They've got constant requests to the refiners in Switzerland. By the way, the refiners in Switzerland, they could be the link that breaks this thing, because they're running 24 hours a day, 7 days a week to refine gold. And as William K. likes to point out of Hong Kong, he said, I think I own a bunch of central bank gold. It goes into the refineries for recasting. So after they do these improper usages and raids of the allocated accounts or whatever bullion accounts that for gold that doesn't belong to them, they immediately tell the buyer, well, you know, here's the bars, and they go and send it to a refiner to get recast so that the evidence is gone. Now, William K. of the Hong Kong hedge funds, he says, I own a bunch of central bank gold. Well, so if it's, you know, I don't know, some German guy or Swiss guy in Switzerland, if it's his gold, what's his recourse? He has none. He has only a claim to make against the bullion bank. He can't go make a claim against the Hong Kong hedge fund manager who owns his gold that's recast. There's no claim. You can't do that. Oh, you know, let me point out just last...
Sorry, Jim. The moral story for me is you better hold it in your hand.
Yeah. Well, let me... yeah, you better own it, and you better be outside the United States and London and Zurich. Let me just mention one little funny thing. I've got this great source who's... he's got incredible knowledge of what's happening in Turkey and India and Iran. He's got family members scattered. He says the GLD is suffering from another problem, and that is gold being supplied by the major mining firms, the biggest mining firms. And you see things like Pascua-Lama for Barrick Gold. That's the Chilean border of Argentina. They're not producing like they were expecting. They're on hold. You see the big cave-in or the landslide in Utah by Kennecott. That's owned by Rio Tinto. That's a lot of gold and silver that's not being produced. It's not going to replenish the GLD fund, so it's being drawn down. He calls the GLD fund an investment in gold in motion. Wow. Okay. So it's less in motion. So these miners are not replenishing. That's kind of the story from the supply side, and I just touched on a lot of things, but it's really hard to cover everything. I've got some other points, but that's okay. The cantonal banks in Switzerland, like ZKB, the Zurich Cantonal Bank, they're coming public now saying, no, we're not going to redeem you. I don't care if you got a gold account. Read your fine print. Well, a friend of mine did just that. He read the fine print, and it said, redemption, if they so desire or see fit, based on business conditions, redemption can be in cash. So these account holders, they're not being redeemed even though they think they can, even though they think they own gold. They don't own gold. They own certificates and accounts that once had gold, but not anymore. Pretty sickening what's happening.
Right. I think that's something that definitely will break here in the next couple of years, the allocated gold scandal. We're already seeing the first signs of it with GOFO negative, all the inventory drawdowns, physicals being sucked east. The numbers in China importing through Hong Kong are just off the charts, and I think once like June and July's numbers come out, it's going to surprise a lot of people how big and how much gold they've imported to China over those 2 months during the big gold price smash. But really, so we have we touched on Barclays revealing almost a 13 billion pound balance sheet hole here on Tuesday. One of Jim Willie's big three to watch, along with Deutsche Bank. We didn't even touch on JP Morgan's wrist slap FERC settlement. here early Tuesday morning. Almost $500 million they've agreed to settle the U.S. energy probe, emitting the next Enron, basically. So we didn't even get into that here today. So quite a few topics that we've covered and discussed, and things that on the burner that could trigger the next banking crisis and the next stage, in my mind, with the bail-in. So I think we'll wrap that up for here. Jim, always appreciate your time. If you want to just give the listeners some quick information about your newsletters.
Sure, but let me just second your point that the demand is off the chart. The demand for the refineries, the transfers, the U.S. Mint, the Royal Canadian Mint, the Shanghai Futures Exchange volumes are all off the chart. We got my best source tells me that China has at least 15,000 tons, which is 14,000 more than they admit, and the Russians have over 20,000 tons of gold. They're ready for the next chapter. They're ready for the next, what we call the gold trade settlement, which is coming in to replace dollar-based settlement. All right, information on my website. The website is goldenjackass.com, www.goldenjackass.com. I write public articles and I do interviews like this, and I post them on what I call main HTML web page. So there's a lot of free information on the website, but I have two different newsletters. I call them, two different reports. I call it the Hat Trick Letter. It's a newsletter. It's in its now 113th month. It's over 9 years. Just pinch me, pinch me. I can't believe it's been that long. Started in April of 04, and the Hat Trick Letter consists of two reports. The Money War report. I no longer talk about forecasts of insolvency and busts of the housing market. All those forecasts came true. I'm running at 80 or 90% correct forecasts on some pretty staggering statements. I'm on record as saying we're going to see a U.S. government debt restructure default. We're going to see an allocated gold scandal, and we're going to see $5,000 gold. We're going to see $100 silver. I'm all on record. All right, the Money War report addresses the high-level things, the competing currency war, and a lot of different central bank activities, the QE, the quantitative easing, the bond monetization, all these hyper monetary inflation concepts. But I've got a second report. It's called the Golden Currency Report, and that's where I get into a whole lot of different things, like the supply and the empty vaults and the demand going off the chart. Like United States and Canada, just together, John, together, if you add up all of their coin demand for silver coins and you compare that against the mining output for US and Canada, there's a 25 million ounce shortfall just from silver coins at the mint. That means the two nations and their industrial demand, which is sizable for silver, cannot be found. It's all shortage. It adds to the deficit. So the deficit is gigantic in silver.
Jim, I want to cut in here and just put that number in perspective, because that's a number from the U.S. Mint. And right. We kind of have a unique view on the silver numbers with ST Bullion. We sell a generic Buffalo round minted by the Golden State Mint. So one of quite a few different just generic private silver rounds. We probably sell 3 to 4 times the volume of that one generic silver round as we do the Silver Eagle. So with the Silver Eagle numbers being just that one U.S. Mint coin being more than the U.S. production, unfortunately we don't have good statistics on all the privately minted silver. But if you included all of that privately minted silver, the numbers would just blow out of the water the U.S. Mint silver production numbers.
That's amazing. I was not aware of the silver rounds. I know of their sales, but not of their volumes. Very interesting. So, you know, you combine the shortage in supply with the acute, fast-rising demand, we're going to see this whole gold and silver market blow up. That's the bottom line conclusion, the inescapable conclusion.